Let's go to CommSec now. Joining us is Tom Piotrowski. Yeah, Tom's back. He was away last week and I miss him when he's away. Tom Piotrowski, how are you?
I missed you too, Pete. It's good to be back.
Now, we had some good figures last week. How are we looking today?
Well, I suppose today what stands out is that the futures are pointing to a sizable decline for the local share market, down by about 1%, whereas the moves that we saw on Wall Street on Friday were contained but underwhelming, I suppose. What stood out was that the Dow Jones continued to hit new record highs. It was up by around 0.2%. The Nasdaq up by 0.4%, but that was enough to allow it to hit a record high. But importantly, Pete, what we're seeing in terms of a shift of thinking when it comes to US interest rates is that we have seen a very profound reappraisal of what's going to happen with US interest rates over the course of the next year. The markets are pricing in several rate cuts now from the Fed, and that has translated to the biggest rally that we've seen since March of 2020 when it comes to short-term interest rates in the US. They fell by about 1/3% last week. So this is where the friction point was on Friday. We had a couple of Fed officials out and about saying that it's probably best not to get too carried away with the rate cut narrative, and that's probably what kept a bit of a lid on stocks in general. But still, there was broad support for industrial stocks. So we had Boeing shares up by about 3%. Technology stocks did well, obviously, with the Nasdaq hitting a record high. Intel and Microsoft up in the order of about 2%. So that was important, but also that moderation in the US dollar has been supportive as far as other commodities are concerned, because obviously they're all priced in US dollars. So you had the price of aluminium, for example, last week up by about 5%, gold up by about 1%, and it was enough to get oil out of that tailspin that it's been in, because it's fallen for 7 consecutive weeks. It only managed to finish with a small improvement in weekly terms, up by about 1%, but still it gives you a sense of what that US dollar reappraisal is doing for other things that are priced in US dollars.